Okay, live stream is on. I hope you can see and hear me. Let me know if you don't. My name is Elina Sinelnikova, and we're going to do today a tools and techniques to finance your business. Again, this webinar is brought to you by Delia. And Delia, this is a financing tool where you can get an instant loan approval if you are women-owned, women-led business in Southern Ontario. All you need to do is go to delia.fund and apply. It takes just a few minutes to do so. And also this webinar is executed by CryptoChicks. We are a nonprofit organization, and we bring in education for women in technology and in specifically in the blockchain and cryptocurrencies and other high tech. For that, we created CryptoChicks Hatchery, which is an incubator for the ideas. And we also have an academy where you can take a course. Some of courses are paid, some are free. So these are the courses that we feature right now, but we have much more courses right now on the website, CryptoChicksAcademy.com, and you're welcome to go and check it out. And I also would like you to take an opportunity to check out a new conference that called Strike Up. And this is the digital conference for women entrepreneurs. Please go register. It's going to be a great event that is organized by Northumberland Community Futures Development Corporation. And again, these webinars is part of the Hacking the Digital Curve Women Entrepreneurship Program. Go and check it out on CryptoChicksHatchery.com/Delia. We have a series of 10 webinars. Today is our 6th webinar. We have 3 more to go after that one. And we also have Q&A follow-up sessions on Thursdays at 3 p.m. And here the schedule of the upcoming Thursdays. So this Thursday, January 21, we're going to be building a pitch deck on the example of Airbnb, who successfully raised money, their very first seed money, 500K. And we also have on the January 28th, we have a Building Your Dream Team. We have one of our esteemed mentors and person who organized and have a very successful business, and a team who he has this team for a while and they never leave him. So he's going to share the story on how he created this team and what he does every day to keep them up. And on February 11th, we're going to have a cryptocurrency workshop. We're going to go through practical exercises of installing wallets and making crypto payments. And on February 25, we have 2 of our female founders sharing their story, how they created their companies, very successful companies, without any funding. And also, I would like you all to join this workshop, a webinar session to share your business story. This is, you can do a little bit of marketing and share your business story and business with other women in our program. And we have a WhatsApp group as well for the information purposes, and you can socialize in there. And this webinar is organized in the way that you do it, and we help you. Disclaimer, in our presentations, we don't promote any of the sponsors or any companies, and we also don't give any legal or financial advice. There are specialists for that you can talk to and we can refer you to. We only share the tools and techniques that we used ourselves and that worked for us. Today, we're going to learn sources of funding. We're going to learn all about investors, funding stages of the companies. We're going to learn how to get the right investor for your company. We're also going to go over the pitch deck, and we have a one guest speaker today. We're going to listen to John Irvin from Leighton. He is going to tell us all about Canadian grants and tax refunds that are available right now that you can apply for right away and how to apply. So sources of funding. When you create your business, you basically have these options to turn to. It's either self-funding, loans, grants, crowdfunding, or investors. So self-funding is very self-explanatory. This is something that you have saved in your life. This is probably some, you can do your RSP or your other retirement savings. And on this stage of the bootstrapping, when you just created your company and you have just probably just an idea and nothing else, also family and friends and their savings and funding would be very handy for you. Make sure that though when you family or friends invest into you, it's no strings attached, no equity sharing, nothing like this. Otherwise you are risking to lose your friends or the family later on. So this is something that we also experience. So no equity sharing with the family and friends, just no strings attached. And also same with the savings, you don't need to share your equity with anyone because this is your money. But of course, you reason to lose the savings if your idea the idea not good. But for that, we have another webinar, which is MVP, creating your minimal viable product to test your idea. And so you can refer to that in our recordings. Other option, you can take a loan. There are personal loans, business loans, and government loans as well. Um, so for example, Delia Fund is the loan that you can take. We talked about it. Also, there are government loans that are available, sometimes very good interest rates. You can also take a personal loan in a bank, but you need to put a collateral, either your house or some other property that you have. And of course, you are risking to lose this collateral if your idea doesn't work. But again, you maintain the full control over your company. You're not sharing any equity. Just lose your collateral. And there are also eligibility requirements for some loans that you need to uh, understand. But uh, you can always check them out, on the government websites or the loans or the bank's websites that are there. Grants, and today we're going to be talking about grants, so that's why I'm not going to be stopping on that much, but this is something that we used the grants and we were successful in them, and this is a very great option to raise money. Crowdfunding there are companies and websites and platforms that allow you to do the crowdfunding. We're going to be talking about them a little bit later. So for the crowdfunding, you basically just talk to the large group of people to invest, to give you some money, maybe like small amounts of money in return for the gifts. And also there are platforms that do it for return for the equity. But in this case, in somewhat you maintaining the control over your company, and but in some cases you need to do equity sharing as well. So read the fine prints for the obligations when you're doing crowdfunding. Again, we will be talking about it a bit later. Maybe I also have to stop on a little bit on the equity as well. What is equity? When we started our startup, I had no idea, for example, what the equity is. Equity, this is shares of your company. So when you're creating your startup, you have 100% of the shares to yourself. And this is the only asset probably that you can give away in return of money to the investors. It means that investors will be owning part of your company. and this comes with losing a bit of the control over your company, and some of the founders, unfortunately, going that route, they lost it all. So therefore, you have to see very carefully who you're giving equity to, how much you're giving away, and read all the fine prints when you sign the documents. Crowdfunding in the technology world nowadays, it's done very easily via blockchain. And we're going to be talking about it in our next workshop on Cryptocurrency 101 for Business more. But in the essence, what it means that you can create your own currency, your own token on blockchain. Majority of people and companies do it on Ethereum blockchain, and it's called different terms. There are different terms: initial coin offering, um, initial exchange offerings, security token offering. So this is also you creating like a digital coin, and you selling those coins in the promise to your investors in the promise that they will get the dividends and returns for it. It's relatively easy to do on blockchain. It takes about 5 minutes to do, but there are securities and laws that apply. And again, we will be talking about them at our next workshop. But there are companies, I know thousands and thousands of companies now that funded their business this way. Crowdfunding for gifts. If you have an art project or you have a company that produces some tangible product, tangible means something that you can take into your hands, something not digital. These two platforms are very good for. It's Kickstarters. Kickstarters.com and Indiegogo.com. You can check them out. Of course, probably you heard about them, and we also had an experience doing the fundraising campaign there. And from our experience, this is something that you have to prepare very, very carefully if you consider in those, because you have like one-time shot at this companies, because and it's also very good test for your product to see the interest. But if you not prepare very well for your campaign, and if you not create the buzz before your campaign, most likely will fail. And these companies, these platforms, they have the limitations. So you have to set your fundraising goal, and if you don't reach your fundraising goal, you will not get any money. So therefore, you have to prepare your campaign very carefully, very smart. Read about it on how to do it. If you have any questions, you can always ask us on the QA session. We had this experience. But it is very simple to use this platform. Also, it's a very good market test again for your product. There are platforms that doing the crowdfunding for equity, and these are the 4 platforms that we know. You can also check them out. Though they have a very high fees, so while you're doing the campaign, you're going to be paying a subscription. And subscription is about like $300 a month. So yeah, you have to be aware about that. And also, but it's also the very good test of your idea of your product. You will see who from investors there jump on board, and you will know if your idea is good or not. Same thing, you'll also have one-time opportunity there. If you prepare your campaign successfully, there is lower chance that you don't get money. So it's high chance that you get money. So therefore, prepare for the campaign. But it also doesn't guarantee that you receive the funds, and security laws applied in this case, because you are selling your equity, therefore you're kind of like selling the securities. Now let's look at the investors. Who are they and what types they are? There are 3 types of investors: angel investors, private equity, and venture capital. Uh, from the investors, you actually get, it's not like a crowdfunding, but from these investors, you get a substantial amounts of money. It's starting from, like $50,000. And but in return, you have to give them away equity. You have to give away control, and also same laws and regulations apply here. So who are the angels, angel investors? Angels are the high net worth individuals who built their own businesses probably in the past. That's how they earn this money. They are seeking, they probably retired, they're seeking high returns right away, so they can make money with their money. And they are investing medium amounts, about $50,000. And they also invest in their own money, of course. From the advantages using an angel investor, is probably the one that they provide help, because they are personally interested in you succeeding, and because they are successful also founders in the past, so they can provide a help for your business. And also they like to invest in early stage startups. Uh, though in return, you have to give them away a big chunk of equity. So this is something they are looking for, a bargain. So they are getting a lot of, like, from 20 to 40% of your company, and they are looking for the high returns. And they also will be pressuring you for faster returns. And the only way that you can return them their money, uh, of course, with the profit, by selling your company. So this is something that you have to be aware of. Private equity doesn't really apply to startups, but we included this in the presentation, that this is how companies usually exit, therefore sell. Using the private equity companies, they buy mature companies, and they also buy it for the large amount of money, like 100 million, not 50 million still. um, and therefore they gain full control, and they do it for the purpose to streamline the operation and resell the company to make a profit. Though I know the cases when the private equity company, they bought and they completely probably ruined the company and were reselling the company to the same owner for the lower price. So therefore you might use this way as well. um, Again, so with this sell, of course, you are losing the full control over the company once you sell it. Venture capitalists. Venture capitalists like to invest into technology startups, mostly. And they also like more advanced stage startups. So you have to have already the product, there's some traction to go to venture capitalists. And they also looking for very high potential for the unicorns. They invest big amounts, about 10 million, but they also provide the help in return, taking a big chunk of equity, and you are losing some of the control, of course, and they will be pressuring you for the faster returns as well. So these are the types that we went over. And now let's go over startup funding stages. Uh, you probably heard the terminology, and now we're going to go over it, because it was, at least it was very useful for me when I just started the startup, to learn all this terminology and funding stages. So the funding stages are pre-seed, seed, series A, B, C, D, and a IPO, initial public offering. Pre-seed funding, this is stage that we also call FFF, when you have family, friends, and fools that invest into your startups. This is this stage this is the idea stage probably, and just very early stage of the startup. And For that, most likely investors will not make an investment in exchange for equity, because they just probably don't see that you're going to succeed. So you need to prove yourself before even going to the investor. But some investors do. If you can prove that your company your idea is a unicorn, of course they invest, and there are even some pre-seed stage funds that do it. You can go and check them out at Seed Camp, K9 Venture, and First Round. But in order to go to them, you already have to have a working prototype and a very clear pitch deck, and we're going to be talking about that. Seed funding stage. Seed funding, that's where already startup valuation is about 3 million. And so they looking to the investments to get their business up and running, but they already proved themselves. They already have the traction, some traction, and of course they already tested their prototype or MVP. But investors still take a huge risk with the seed funding because startups cannot guarantee a successful business model yet, just yet. So the funds usually go towards product launch, early traction through marketing, strategic hiring, and market research for the product market fit. There are some seed stage funds that invest into this stage. One of them, very probably famous one, is Y Combinator. This is a famous incubator. But if they have, of course, the entry criteria, so you cannot enter unless you satisfy them. Series A. For Series A, you have to have already developed product and customer base with a consistent revenue flow, and startup valuation is about from 10 to 30 million. Your goal at this stage is to scale across different markets. And also you need to have already planned that would generate long-term profits. And investors at this stage looking for a solid business strategy that can make money for them. And you see this, there are Series A stage funds. So in this stage, the venture capitalists very likely to invest. Series B, it's when companies already grew enough to have a substantial user base, along with a steady stream of revenue, and their goals to increase the market share, form operational teams such as marketing, business development, and customer success. And their goal for the funding is to grow to a larger scale. Series C and beyond, it's already well-established companies that valued at 100 to 220 million with a strong customer base, steady revenues, and all investors are happy invest at this stage because it's a very low risk here. But at this stage, companies usually looking to expand their operation on the global scale. And the final funding stage is an IPO, which is when you basically sell your shares to the general public, and these are who your potential investors are. So you list your company on to sell the shares to the public. And at this stage, probably the founders is looking to retire already and establish organization. It is actually there's exit strategy at this point for the founders. So these are the startup funding stages. I hope you remember them all. It's pre-seed, seed, series A, B, C, D, and initial public offering. And now about the strategy on how to land a right investor. And the question is, do you accept any money that come your way? Well, and the answer is absolutely no. You have to see where this money is coming from and which investor is right for you. Otherwise, you are in for trouble. So how to find the right investor? You start with the questions. And in order to form the question, you have to understand the investor's dream. And all investors' dream is the unicorn. They all dreaming of the unicorn. So first, they have to be familiar with the industry, and you have to have a management team that they believe in. You have to prove yourself, you and your management team, you have to prove yourself to the investor. You also have to have an idea with a large market. So if you have an idea with a very niche market or like a very narrow market, so probably you will not interest the investor. So it's a large market and also competitive advantage. There's something about you have to be very special that nobody else, no competitors can come and take it from you. And also you already have to have attraction. So you of course you have to build, or you're already your first MVP, you have to have your user base at least a couple of hundred people, and the momentum as well. And this idea will have to your idea will have to generate the cash flow and give them a faster return of investment. So this is the investor dream. So what are the questions that you're going to ask? So first you ask the question yourself: can your startup really grow? Do you have a credible team? And are you committed to exit if investor pressures you? So this is the three questions that you ask yourself. And these are the questions you ask an investor. So how well they know the industry? They most likely will not invest if they don't know your industry. What startup stages they invested in? It's very good for you to understand which kind of companies they invested before. And it's very great for you to do the due diligence to verify actually investor reputations from this company to get some recommendation on how to work with this investor, and so in order for you to avoid any possible troubles. And other questions: what help they provide usually to the companies that they invest, and how much they involved, what is the degree of their involvement into the company, and what are their expectations if they would invest, what are their expectations are. So these are the questions you ask your investor. And after you land the right investor, the investor group, you are going forward with a strategy. Strategy is when invest. There is a right season for the investment. So for example, November, December, or end of summer would be a bad season for the North America because of the holidays. And every country has their own probably season. So just be aware that you cannot start your um, investment rounds during those seasons. Also, you have to beware that your industry have to have upswing in the seasons. For example, when for the vacation industry, let's say the summers are good. Well, it's not applied to COVID anymore, but usually, right? So this when there's upswing, when there is big interest in vacations, then most likely investors will invest in the vacation industry. Also, you have to tune it in the investment with the positive data from your own startup. For example, when you have you increased your user base in that month, so that's where you start investment rounds to show your momentum. And also, but you also have to expect about 1 to 3 months negotiations with investors. So beware, so that will still fit in the season that you choose for the investments. Establish relationship. Have you ever lended money to a person that you don't know? Uh, of course, the answer is no. So therefore, you have to get your investor have to get to know you before they give you any money. So therefore, you have to meet them early and maybe show them working prototype without even pressuring them or mentioning investments. And do the monthly update on the growth. Probably is very good. It will be very good to mention that you not looking for investments yet, but you will be looking in the future, and therefore you keep them updated until you're ready to bring them on board as an investor. To get investors, use the rule 30-10-2, which is for every 30 warm introductions, about 10 investors would like to meet you, and only 2 would invest into your startup. So uh, see how much money you need and how many investors you actually have to get the warm introductions to. Once you have the group of the investors, you have to split them into the groups. So don't do the pitches to the whole big crowd on investors, and don't do the pitch for one investor. So probably split them into groups and schedule it like very close in the same few days, and then stick with a most interested group in the uh, of the investment. So they have to get a sense that you're not over shopping, that you're not offering this investment to everyone, right? So that therefore, if they come in the room, then there are 100 potential investors, most of them will lose interest. Pitch, very important, because I know that majority of like tech startup founders, they think that they can just talk about their product patiently and that's it, and that will do. Unfortunately, it's not like this. Your pitch not supposed to be improvisation, and if you just enter an investor room thinking that you're going to swing it, it's not so. You have to practice it many times. Also, you have to practice with the timing, spaces for questions, possible stumbles, and you have to practice it in front of your trusted advisors who raised money before, who can give you the pointers. So your pitch have to be like a performance. Once you got investors into the group, presented it to them, then you have to close the round quickly. Don't linger, create a sense of urgency, otherwise they're not going to commit. And so yes, so the phrase that you probably give to them, that you already have that much amount of dollar committed and that you're planning on closing the round in such and such time. If you would like to invest, please invest right now. So create a sense of urgency, and also tell them that others want to invest. And the pitch. So the pitch, we're going to go briefly over the pitch. We also have a Q&A session this upcoming Thursday where you can join and we can help you to build your own pitch. But these are the um, items that you have to include in your pitch deck. And let's go over them. So the pitch deck. So here we took the very real statements from Airbnb pitch deck that they were able to raise 500K from the first round. And this not the design, we didn't take the design, of course, but the text and the content are theirs. So have to start with an intriguing summary of what your company does. For example, for Airbnb, it was book rooms with locals rather than hotels. Very short and very descriptive. The team is very important. Again, in order to save time today, I will not be stopping. I will not be discussing this in detail, so join our Q&A session where we can go over your team members and maybe put the introductions to them, the one that matters for the investors. But the rule of thumb, they have to have an outstanding accomplishments. For example, like sometimes I read the investment decks where the team is the students of this club, student that, student this, so nobody going to invest into when you just have 3 students in a team. So they have to have an accomplishments in order for them to be credible. If you don't have, get an advisor or somebody, a senior member of the team that are credible. Then you state the problems. So you can state the problems that are you going to solve, the problem that exist. And these are the 3 problems that Airbnb listed. Price is an important concern for customer booking travel online. No easy way exists to book room with the locals or become a host. And also hotel leaves you disconnected from the city and its culture. So these are the 3 problems that they listed. And three solutions, of course, for the three problems, three solutions, which is very clear and concise as well. And then you also have to introduce your company, the product, and explain what your prototype will look like, maybe on 2 to 3 slides here. So the next slide is dedicated to the market validation, and for the Airbnb it's was very clear, and so here they proved with just those two statements that market exists. So they use the Craigslist and couch surfing for the approximate amount of users and house listings, so therefore prove that the market exists for this for their app. So the next slide is probably, um, no, it's still very important. So that's it shows you the measures of how big the market is. And this is some total available market, serviceable available market, and serviceable obtainable market that you can also list in to show you investor of how big the market is. Direct and indirect competitors. So if direct and who has exactly the same offer, same thing as you, and indirect, the ones that have different product, but probably going to solve the same problems. And of course, after you list competitors, you are listing competitive advantages over them. And therefore, so here you see the 4 things that Airbnb listed. Also, again, very concise and easy to understand. And next important thing is approach, and how do you do the market adoption, so your go-to-market strategy. So you see here they listed 3 ways how they would do it, and it's very important to think through on how exactly you're going to conquer the market. Traction. It's very good when you already have an MVP and you have also already some user base. So for traction, Airbnb, I didn't put it here, but they just listed their, but the time that they were raising money, they already had their MVP, and they had some of the testimonials, and also what they had some traction in the media as well, in the newspapers and on the other websites, so all the recommendations and everything to use their product. So therefore, any traction that you can show on this slide is very valuable to the investor. Business model have to be very clear. Business models, or the revenue models, and how you're going to make the money. And here you see that they listed it's 10% commission, and also again they are given an idea with the target market of how much revenue they're going to be getting. And on the financial slide, they are showed how they will be using money and how they increase, you see, from the 500K to $2 million revenue. And therefore, we just went through the pitch deck, and we're moving on to our guest speaker, Jonathan. Please take a stage. So Jonathan is our longtime mentor, and he is also helping us with the grants as well. So highly recommended. Jonathan, all
Thank you.
yours.
Thank you so much. Let me just share my screen here. I think this is the right one. I have a dual screen, so okay, there we go. Can everyone see my presentation?
Yes.
Perfect. Okay, so thanks, Elena. My name is John Irwin. I'm a software engineer by trade, but I decided to get into the government funding game, Jesus, about 12 years ago now. And so primarily my focus has been with Shred, but I also have done many, many grants. I came from PwC, and I've joined Layton. And at Layton, we are funding experts. That's what we consider ourselves. So we primarily, our bread and butter is Shred. but we also help our Shred clients with grants. So just to give you a little bit of information about us real quickly before I jump in. I know I have 15 to 20 minutes. So just to let you guys know, I have more slides here than what I'm going to speak to, just because I wanted to ensure that I gave you more information or enough information to make this worthwhile, make this worth your time. So a lot of slides I may skip over or just touch on briefly, but just know that all of these slides are in the final presentation for you for reference. So just quickly, we're based in France. We're in 12 different countries. We have over 1,500 employees. And one thing I like to point out, 40% of our workforce is female, something I'm very proud of. So it's great for this company. And we have over 20,000 clients. In Canada, we have 2 offices, one in Toronto, one in Montreal. Before COVID, we were looking to expand into out west, maybe BC or Manitoba. Hopefully, those plans will come to fruition soon enough. We have over 700 clients currently, and currently over 50 employees. So we're growing quite fast. I'll skip over this slide because Elena already touched on it. So this is just, I'll just touch on tax credits and grants real quickly. So a tax credit is where you get the money after the fact. So in a tax credit, you're entitled to. Whereas a grant, you think about it this way, you must be granted permission before spending the money. So it's an upfront kind of thing. And it's success-based and it's based on timing and eligibility. So that kind of speaks to this first slide. But there aren't very many tax credits out there, just to let you know. There's 2 main, as far as it relates to innovation, there's 2 main ones. The first one is the Ontario Interactive Digital Media Tax Credit. So that's if you're developing educational products for children under 12. This is in Ontario specifically, or if you're developing a video game. The other major one is the Shred Tax Credit. And the Shred Tax Credit is part of the Tax Act. So it's this really thick tax book. And on one paragraph of one page of this thick book is this $3 billion a year program. It baffles me. But with tax credits, if you meet the requirements, you're entitled to that money. That's the good thing about it. So you know that if you're doing Shred eligible work, you're eligible for the money. Now with grants, it's completely different. Grants are very competitive. But the good thing about grants is that you know that once you're approved for a grant, that you're going to get that money as you go along. So, for example, if you get a training grant, if you get approved for a training grant, you know that once you spend the money on the training, that you'll get reimbursed from the government it's usually within a few weeks of spending the money. So, but the problem is they're very competitive. There's thousands of grants out there. A lot of them are in Ontario, and they come and go a lot. The one thing to note about grants currently is that it's sparse right now because of the COVID funding, because of all the COVID-related funding that has gone out. There's less grants available, and grants that should have opened haven't opened, and grants that should have come back. The one good one, and I'll touch on that, that's a really good one for startups, is the Canada Summer Jobs. And I know Elena and the CryptoChicks have taken advantage of it in the past, and we'll touch on grant specific examples in a bit. So just briefly, the Shred program, if I can put it simply for eligibility purposes, it's where you have a problem that you're trying to overcome, or you're uncertain whether or not you can overcome it, and it goes beyond standard practice and known solutions. And what I like to say is you can't Google the solution, or in the software world, you can't go to Stack Overflow. There's no solution. You get reimbursed for it. It varies by province, but in Ontario, if you're a Canadian-owned company, you get about 65 cents for every Shred eligible salary dollar. If you're building a prototype, a hardware prototype, you get about 42 cents for your materials that you've transformed. And if you're using Canadian subcontractors, you get about 35 cents. And I talked about the eligibility, and the CRA really uses 5 questions to determine eligibility, but it all comes down to that one question that I told you. What was the problem? What was the problem that you were trying to solve that known solutions or common practice wouldn't solve for you? The other questions are that you have to answer. What did you try? So what did you try to overcome the problem? What was the attempts? What was the outcome of your attempts? And did it succeed or fail? And what did you learn from it? The other big portion to the SHRED program is documentation. So that's something we can help. You need a lot of supporting documentation to support the claim. So I'm lucky enough that I have a direct line of contact with the head of SHRED, Jason Chahon, and him and I have quarterly meetings, and he shared with me some great insights. I'm not going to go through them. Just one I'm going to highlight for those who have gone through SHRED. CRA is now finally accepting communication via email, which is a huge thing. Before, you can only fax them and different things. So that's something that I like to point out, which they're finally part of the internet age, I guess. So there's some great changes. I would recommend going through this. And if you have any questions, feel free to reach out. So grants, should you apply? The one thing about grants, again, and I'm going to reiterate this because this is key, is you must be granted permission before spending the money. Now, because of COVID, there are a lot of delays when applying for grants and getting approval for grants. Typically, if something took 6 months, it's almost double the time now for approval. So it takes up to a year. And that's where we're talking about 50,000 and plus. That's where you're getting into the 6 months. Where you're below the 6 months, there's one program called Can Export. They'll cover 75% up to 75,000 to embark into a new market. That one, typical turnaround is 2 to 3 months. Hiring grants take a few weeks for turnaround. Those are smaller, but those are really easy grants. If you're, as we're coming up to summer, if you're looking to hire an intern or a co-op student, and I'll touch on one specifically that's closing on January 29th, something that you can take away from this. But the way that you want to look at grants when you're looking for grants, you don't want to create a project for a specific grant. That never works in the long run. You usually end up spending more money. What you want to do is, and this is what we do with our clients, is we sit down with them and we find out what they're looking to do, what their strategy is for the next 6 months, a year, 2 years. Then we come up with what we call a grant canvas, which aligns with what they want to do, knowing the timeframes and turnaround times for approval. If they want to train their employees, we know that the typical turnaround time is 3, 4, 5 months sometimes. So we look to plan about 6 months out. What are you looking to train for in at least 6 months plus? So creating a grant canvas is your best way to ensure success, because then you know the timing of things. Creating a cost or a project just to go after a grant rarely ever works. Now I'm going to get into some grant examples so you have some takeaways. Some of them I'm going to touch on a little bit longer than others, but this is just to give you a high level overview of kind of what's out there. But just know this is a very small sampling of what's out there. Within this slide, or within one of these slides, there is a link to do a search on the Canada government website, which you can do yourself. You can also create your own profile. And it will update you when a new grant becomes available that you might be eligible for. So this one I wanted to touch on. This is Canada Summer Jobs, very popular. You get up to 75% of minimum wage. The typical approval that we've seen is about 8 weeks, that someone's working for you for 8 weeks at 35 hours per week is typically the average. If you are not for profit, you get 100% of that wage covered, which is great. So you must have 50 or fewer employees to be eligible, and you must have people on payroll, obviously. So that's the eligibility for the employers. The interns, so 15 to 30 is typically the standard for any kind of hiring grant. That's kind of the most popular age range. So they must be a Canadian citizen or PR, or has refugee protection and have a valid social insurance number. So typical things. And that's typically, so if I were to create a kind of a profile of eligibility for most hiring grants, that would be a typical eligibility criteria for most of them. You'll see here, this is another hiring grant, ICTC. It's a maximum of $14,000 per intern or 50% of their wage for a minimum of 3 months. Again, you'll see here, mouse. Again, you'll see here between 15 and 30, Canadian citizen, and all that sort of stuff. So those are the typical criteria, and there's a few of those out there. There's less than there used to be, but most of them are for our tech-related hiring grants. There are a few for persons with disabilities or minorities, and we can certainly pass those along if those are of interest to you. This is just another example. This is a smaller one for $3,000, but this one specifically, you must live in Ontario. It doesn't say between 15 and 30, but it might not be. They must just have graduated from a Canadian post-secondary education. So another hiring grant. So NGen, this is a larger grant. So this costs up to $20 million. But this is the only real manufacturing grant that's really out there. And you really have to, it's a collaborative grant. So you have to collaborate with 2 to 3 other partners. And I put it in here just to give you an idea of the vast difference in eligibility criteria when it comes to grants. So when it comes to SHRED, it's easy eligibility criteria. When it comes to grants, it all depends on the grant. And success comes from knowing what the eligibility criteria is, but also reading between the lines and establishing a rapport with the granting body. That's your best bet for success, is calling them up, talking to them, asking them, is there anything else I should know that's not on the website, kind of thing. That's where our expertise comes in, is we have a lot of these established relationships, so it helps. But this is one of the manufacturing grants. I talked to you about a training grant. So this is a training grant. You get between 50 to 83% of your training costs covered, up to $6,000 per trainee. Those costs are, if you want someone to take an accounting course at a college, anything like that, if it relates to the business, that will be covered and you would be eligible to train. The only thing is that the training has to be delivered by a third party. It can't be delivered by someone internally, and it's got to happen in Ontario. So it's a great program to help employees who want to just add new skills or enhance their skills or things like that. It's a great program. Turnaround time, typically 2 to 3 months, but it could be longer with COVID. So just give it at least 5-6 months. This is another large grant, Strategic Innovation Fund. I'm not really going to touch on it. It's for large corporations. Think Stelco and GM and those kind of big companies. IRAP is a great program. It used to be a great program. It's a very broken program. It's similar to SHRED as far as the criteria for the technical eligibility, except this one is an upfront grant. So this one, you get the money up front, you get it as you go. With IRAP, they typically give you, they typically reimburse you either on a monthly basis or quarterly basis. This covers a little bit more than what SHRED would, because it would cover your management team and different things, prototyping and different things like that SHRED doesn't really cover. So it's a great program. The only problem is now because IRAP was asked to deliver some of the COVID funding, the IAP funding, it's much more strict and they're giving out much less money. So that's just the change in the landscape when it comes to grants. Can Export, I kind of touched on this. This is a great program if you have a minimum of $100,000 in revenue and you're looking to expand into a new market. So example, the US. The US is broken out into 4 quarters with Can Export, but this is great. You can get Google AdWords campaigns covered. You can get market research, different things like that. Before COVID and once COVID is over, you can do business travel. You can, for trade fairs and booths, all that sort of stuff. That's all covered under Can Export. Currently, none of the travel is, obviously, but all of the other stuff, legal fees, IP, and things like that. It's a great program, 75% up to $75,000. I just want to take a pause real quick because I didn't touch on this. So there is a huge disconnect between what the government considers a startup and what an actual startup is. So you'll see a lot of times with these grants, You must have been incorporated for at least 2 years. Some of them you need some income, some of them you need employees. That's not what a startup is. And so a startup is brand new, don't have much income or any at all, maybe don't have any employees. And there is a huge disconnect in funding, just to let you know. There's not much out there except for hiring grants. And the problem with some of the hiring grants is you need a payroll set up in order to be eligible for some. And that might not be something that's feasible for startups. So just so you know, as we're going through this, you're like, well, I don't hear of anything for any startups. And that's because there really isn't anything for a true startup company because of that disconnect. MyTax is great if you need a PhD or master's student to hire. You want to collaborate with a university or college. FedDev is one that we've gone after a couple times. Some of them are non-repayable contributions. Some of them are zero interest repayable loans. It all depends. There's 3 different streams for FedDev. Right now, I would suggest staying away from FedDev. They've also been tasked with delivering COVID funding, the RRF. So it's very strict, very, very difficult to kind of get the money because these are larger grants that you're going after or larger loans. So I just steer away until things kind of die down when it comes to COVID. So for those in the agricultural, if there's anyone, there's a really great ag grant, which is the CAP funding, which is the Canadian Agricultural Partnership. It covers many, many things. It covers marketing within Canada, expansion within Canada. It's really, really good. The problem, again, with COVID, it hasn't reopened until just recently. And because of that, it was very oversubscribed that they closed it within a few days. So again, just to be cautious of different grants that are out there. OCE is a wonderful organization that we partner with. Not to say FedDev isn't, we work with them, but OCE we've got a great working relationship with. They've got a lot more tech focused and a lot smaller grants. That's why I say this. So they have, if you're looking to develop something on the 5G network, or you need to test the scalability of your platform, they'll give you up to $50,000, but again, you have to match it. So they'll give you 50, you match it with 50 to access. So for example, the scalability, it's the next generation network program, NGNP, or it's also called SenGen. That will give you, they'll give you $50,000, but they'll also give you access to their data center to test the scalability and to stress test your platform. On Core 5G, you get direct access to the testing center that has all of 5G technology for you to test that. If you're developing any kind of autonomous vehicle technology, there's that one as well. So they also have, and it's not on here, it's called market readiness. And that's where, like Ellen was talking about investors and funds. They will match investor funds. Obviously, they'll take some equity. But if your IP has been developed in collaboration with universities, for example, if it was developed at Mars DD or McMaster or something like that, they have a program called Market Readiness where you can get matching funds for investor funds that you've received. I know there's very few spots left for that one, so but that's just to give you an idea of what's out there. So in summary, for most grants, larger grants, if you're talking over 50,000, you must be incorporated for at least 2 years. OCE doesn't require that, so that's a good thing. Some grants do require income, like IRAP and Can Export. Most of the hiring grants that I've talked to you about can be completed within 30 minutes to an hour at the most. And here's the link that I was telling you about to conduct your own search. You can go to this link and you create a profile. So it asks you, it's very straightforward. It takes 5-10 minutes to fill in your profile. And then it'll give you a list of different things, not just grants, not just tax credits, but loans and different things like that. So it's not the most extensive list, but it's a good start. There we go. Any questions?
Thank you, John. That was super great. Yes, ladies and gentlemen, any questions? let us know in the chat, or you can raise a hand and we will
Yeah, there's
give you the stage.
about Northern Ontario. So
Yes.
I didn't include it. There is an amazing program, NOHFC, the Northern Ontario Heritage Fund. It's by FedNor, which is a branch of FedDev, and it's got some amazing programs. So if you're Northern Ontario, I'm sorry, Barrie's not considered Northern Ontario. So if you're Sudbury or Thunder Bay or Sault Ste. Marie or North Bay, there's some really great. And they're much easier to get because they have a lot of money to give out and they're trying to promote the North. That's a good one, NOHFC.
There you go. Thank you. Any other questions? If you don't have questions right now, but you can think of the questions, you can always ask us on Thursday. Join our Q&A session at 3 p.m. and we're going to be building the deck. Oh, so Limei has a question. Limei, you can, yeah, you can ask. There you go.
Hi. Hey, I just wanted to say thank you, John.
You're welcome.
Nice to see you, and it was a great presentation.
Thank you so much. It's great to see you too. Thank you, Limei.
Thank you, Limei. So that was a great question.
If anyone does have questions outside of this, outside of the Thursday, Elena can share my contact information. I'm more than happy to talk about anything or run through anything or answer any questions. I love what I do. No stupid questions when it comes to this because it's very complex and very convoluted. So more than happy to answer any questions one-on-one or any other time. So thank you so much.
Yeah, John, and why don't you join our WhatsApp group for the daily program here?
I'm on it. Yeah.
Awesome. Yes, and you can ask in the WhatsApp group
as
well.
Ask there too.
So there is a question from Sharia. First, I'm not sure if this has been asked since I missed the first part. Is there places that help you apply to grants? I'm an established business looking to expand. So there you go, John.
So yeah, so that's us.
Yeah. There you go.
We help to apply for grants. We do heavy lifting. Obviously, we work. We work on contingency. We work. So that means you don't pay us until you get the money. So if that's something you want, I know there may be some other free programs. I'm not sure of those because they've come and go. They come and gone. But if there's a specific grant that you want help with, more than happy to sit down and talk to you and figure out if it makes sense for us to work together. Some companies it doesn't. Some companies they like to do it themselves. They don't want to pay or it's too expensive. We're very flexible. We're a small company in Canada at least. More than happy to sit down and talk.
So the other question from Ariane. So what grants help with the legal setup?
Yeah, so I'm not sure of any because my focus has been primarily tech. There could be legal grants. So what I would suggest is do that search in the link and put in your kind of company profile or potential company profile and see if anything comes up. And if there is and you want some more information or you want me to have a look over it, feel free to send it to me. I'm more than happy to do that. But I'm not aware of any specific grants that help with legal for companies at this point.
Yeah, and Ariane, you might want to join our fast track company, the webinar that we're going to be having in February. So we're going to have two legal representatives and maybe they can know as well. Yeah. And as well, do you have, the contact, John, you gave the contact. I think that's all time we have for today. Thank you very much, everybody attending. We're going to be seeing you on Thursday at 3 p.m. and also talk to us in the WhatsApp group and email us at stayintouch@cryptochicks.ca. Thank you so much and have a great rest of the afternoon.
Thank you, everyone. Thank you, Elena. Good to see you again.
Thank you, John. Bye.
Bye, guys.
Goodbye, everybody. Thanks.